Hi guys, Protruder's Bruno here. I am back again with another video on how to start trading Forex as a beginner. My previous video was on the channel intro, what you should expect from the channel or what you should expect from me as someone who is starting out in Forex trading. In today's video, we want to look at how we can actually appreciate and understand the concept of pips calculation. But before then, I would like to share with you some of the things or concepts that you need to know. In fact, you must know them. You have to know them before you can actually jump into the advanced concept of Forex trading. You want to know what Forex is? Okay, so someone who is just starting out in Forex trading, you want to take your time, just read a little bit about Forex, and then you want to know what is traded in Forex. So if you are starting out to trade Forex, what are you going to be trading in Forex? Then you want to know where can you actually trade Forex. Then you want to know who a broker is or what is a broker. Most of the times you hear complaints from traders about their brokers, a broker doing that, a broker did this, and a whole lot of things. You want to understand who a broker is and which broker that you want to go with. Then you want to take your time and read about the concept of bid and ask price. Okay, bid and ask price. You come across something we call spread along with bid and ask price. Take your time and then understand it. When a trader says he's going long or he's going short on a particular currency pair, what does that mean? Take your time and go through. If you want to know what a trending market is, what a choppy market is, someone says the market is trending up, someone says the market is trending down, what does that mean? Just go through. In fact, I'll leave a link in this video's description to all these concepts that I've mentioned. Take your time, go through the link. There are even more concepts that you can explore with the link before you can actually jump into the advanced concept of Forex trading. Having said all these, let's jump right into today's video. Now, for pips calculation, it follows the rule of the fourth decimal place. That is to say that anytime you are dealing with pips calculation, you want to start your activity or your calculation from the fourth decimal place. Now, this is a general rule, but there are exceptions. Okay, so we'll come and look at the exceptions later. But there are two most basic things that you need to take note of when you are dealing with pips calculation. What type of trade are you in? Are you in a sell trade or you are in a buy trade? Now, let's say as a Forex trader, you speculate within the Forex market, and then your setup for a particular currency pair says that you should be exiting that trade at a 50 pips point profit, right? So you'll be making 50 pips from the trade. If it is a buy trade, you want to add 50 pips to your point of entry. That will give you your TP price. And then if it is a sell trade, you want to subtract 50 pips from your point of entry. That will give you your TP. So these are the two things you shouldn't forget. Anytime you are dealing with pips calculation and then it is a buy trade, you want to add to your price point, and if it is a sell trade, you want to subtract from your price point. So for example, let's say I had a trade setup that suggests that I should be entering from this price point, and then I'm to make 11 pips from this trade. If it is a buy trade, I'll add 11 pips to this price point. That will give me 1.3100. And if it is a sell trade, I'm going to subtract 11 pips from this particular price point. Now, if you open your MT4, MT5, you have your watch list interface as shown on the screen. So you have your currency pairs here that you are looking out to trade, and then you have the price against each currency pair. Now this column of price represent the bid price, and then this column represent the ask price. Remember again, if you are placing a trade, if it is a buy trade, your trade will be activated with respect to the ask price. If it is a sell trade, it will be activated with respect to the bid price. Now below the bid and then the ask price, you see that there are price points too that have been labeled high and then low for each of the currency pair. So we have the low here, we have the high here, which runs true for all currency pairs. Okay, the difference in the low and then the high will give you the spread. The spread is actually the money your broker takes away from you, or the broker charges you right away if you place a trade. Like I said, that is why your trade runs into negative or never runs into profit immediately you place the trade. Now this symbol here you can see is gold. The X here is an index. AU is a chemical symbol for gold on the periodic table, and then USD, United States dollar. This is Aussie dollar, and then this is USD, Japanese yen. This is the British pound paired with the US dollar. So for all of them, you have your base currency, base currency, base currency, base currency, and then you have your code currencies. Okay, so code currency, your code currency, code currency, code currency, right?